Good morning, trading world. It is December 17th, 2021. It is 8:36 a.m. and this is my pre-market outlook. The title for today's outlook is DeJa'Vu, possible Fed Day repeat, and it is a warning. If we go back a couple days, the video, I did a video before the Fed Day saying that a rally is here, it's in sight, but it does not have legs. And I said something to the effect of we'll be saying rally here today, gone tomorrow, or something to that effect yesterday. And here we are. Rally definitely has disappeared, and we're here at an expiration Friday, so big moves are likely. Now, to kind of bring or explain the concept of how I'm looking at the market right now, picture the market being a runner, and that you can only run so far before you're out of breath. And when you run out of breath and you get tired, instead of putting your hands on your knees and walking to cool down, you consolidated or walk or ran backwards to cool down. Also, like any runner, you build up your distance and endurance each time you run. This is the market that we're in right now. It is building up endurance to run, that is longer sell-offs, and these sharp rallies back are like the cool down periods, when you finish running and you're trying to calm down and catch your breath. This is the condition that we're in right now. This also kind of brings me to a conflicted moment. I've been saying for quite some time that large fund managers are doing everything they can to kind of hold on, keep the market up so that they can obtain these obscenely huge bonuses for the quarter. And the market is deteriorating. And so they've come up with a way to do it, and now that is deteriorating as well. They've piled into these large or mega caps stocks, and they've kind of picked out a few stocks that if they concentrate here, they can kind of hold the entire market up by concentrating money in just certain key areas. And it has been working. But as the overall market continues to deteriorate, it's becoming harder and harder to focus on these few areas and continue to hold the market up. So even as we see these mega market caps like Apple, which has been very important to holding the market together, it has started to deteriorate as well, along with Nvidia, Tesla, Microsoft, Google, Amazon, XLF. All of these things, it's becoming too hard to hold together. Now, that confliction moment I'm having in knowing this, there is a level that if we fall below, it opens up the Pandora's box of sell side activity. Now on the SPY, that level is around about 450 or so. So the quandary is, can we build up enough endurance to run that far? And in order to run that far, large fund managers are going to have to abandon their plays in these concentrated mega market cap stocks and join in to the selling. Now, I've said before, it doesn't take new sellers for the market to fall. But in order to cover that type of distance and achieve that type of panic selling, fund managers are going to have to join in on the sell side. So this is where we are right now. And I've said all along that this kind of, it's going to be, well, they say that history doesn't repeat itself, but it often rhymes. So to me, this December is rhyming with the December of 2018. And in saying that, I was looking for a nice flush or push down before Christmas. And then we get maybe one of the sharpest and strongest dead cat bounces we've probably ever seen beginning after Christmas. So will the window dressing with the mega cap stocks be enough to hold it together through the end of the year? I guess this is what we're all about to find out. Let's get into key levels. All right, here we are with the key levels to watch today. We're going to start with the support side. The Jack support is 462, which we're already holding at. The Queen support is going to be 460. And then we have a steep drop off down to the King support, which is somewhere between 458 and 456. On the resistance side, we have Jack resistance at about 465. The Queen resistance is 467/468, somewhere in that area. And the King resistance is going to be between 470 to 472. Really, it should be between 469 and 472 because we could peter out anywhere in between that. If things kind of play out how I'm thinking, if we get sort of a repeat of the Fed day dead cat bounce or squeeze, I should say. Getting into how this should shape up, it should be fresh in your mind as to how the Fed day played out. comes to today's activity, I could see a lot of consolidation here, kind of working our way down, very organized and rhythmic until we get to one point and we just kind of take a deep dive, and then all of a sudden, boom, we are coming back out of it. And when we come back out of that, we may get a head fake, but then we're going to get a move similar to the Fed day. And where it stops is hard to say. Now, around here, in order to get this move to happen, you still have stocks like Apple kind of deeply in an oversold position or condition. And I look for Apple, Nvidia, Tesla, and especially Microsoft to be the cause of the turnaround here. So watch those carefully, especially Microsoft, that they will probably turn around and start to bounce, and that's going to drive everything else up with it. Now, there's a difference in a gamma squeeze, short squeeze, or I'm having a brain fart right now, and what I like to call a dead cat bounce. I like to categorize the type of bounce that I see this being. It's more so of a dead cat bounce. The Fed Day meeting, that was a squeeze of some sort. I like to say gamma squeeze. But today is going to be more so of a dead cat bounce. Especially because this is expiration day. And it's going to be very important of how we close today. If we fade going into the close, if we start tumbling back into the close, it could spell, let's just say that we could come into Monday with a huge gap down. And the reason we have these huge gap down, and the reason we have to have these gap downs, is to kind of take the momentum algorithms out of the equation. Because with the bounce going on here, if we bounce, some of those algorithms can look at that as momentum, and at some point these bounces can kind of roll and turn into something where the algos join in and they push it higher and higher. But Monday, if we come in, if we're gapped down, that takes the momentum algorithms out of the equation for the moment. And this is how we're going to get that new batch of sell sides activity. So this is kind of how I see things play out. There are other scenarios, but getting this close to the holidays, I'm not at the desk as much as I would like to be. So this is what I'll be looking for and preparing for today. And just like yesterday, I started putting on a lot of put spreads, and even some of the older put spreads, what the bounces have allowed me to do is to buy back the short side of those spreads, so that now I have a straight put at a smaller cost basis. And I'm looking to do a few more of those. I'm hoping that, you know, with this bounce, I'm able to buy back a few short legs of puts, so that I have a lot of puts on at a lower cost basis coming into next week. So that's my game plan. That's what I'm looking to do. As always, know your risk. Please be in risk defined positions, because it could get pretty ugly here next week. And wishing you a successful trading day. And if this is, I'm not sure whether this will be the last video before Christmas, but if it is, happy holidays to everyone. Merry Christmas. And I will see you soon.